I'm going to reveal 3 best swing trading strategies for beginners. These strategies are tailored for trading gold, forex, or any other financial market. And I will share a lot of examples based on real trades that we took with my students. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First, let's discuss 3 important things that unite these strategies. All the strategies will be the trend following strategies. It means that all the trades will be strictly taken in the direction of the market trend. All of the strategies will be daily time frame based. It means that a daily time frame will be the only time frame for the market analysis, trade execution, and management. And all the strategies are the technical analysis strategies. It means that the decision making process and the market analysis will be based on technical analysis, price action, and support and resistance levels. The first strategy will be called the break-off structure swing strategy. In a bullish trend, this strategy will be based on a bullish breakout of the level of the last higher high, while in a bearish trend it will be based on a breakout of the level of the last lower low. First, let's discuss how to trade the bullish break-off structure. In a bullish trend, a bullish violation of the level of the last higher high and a daily candle close above that is a very strong bullish signal. It signifies the strength of the buyers and indicates a highly probable bullish continuation. Your perfect entry point after the confirmed break-off structure is the retest of the level of the last higher high. Stop loss should be based on the ATR, average true range indicator, and the take profit should be based on the next strong resistance. Take a look at EuroCAD pair. The market is trading in a bullish trend on a daily time frame, and we see a confirmed break-off structure, a daily candle close above the level of the last higher high. Traders, don't miss a big summer sale. For 1 week only, get a lifetime access with a 40% discount. Inside you will get the access to my daily live streams with live trading, live analysis, and live Q&As. You will get my course and the book explaining to you my trading strategy. And as a bonus, you will get a lifetime access to my VIP Signals group. For more details, visit my website, the link in the description below. Don't miss your chance, traders. Here's how our long position should look. We place our buy limit order on a retest of a broken level of the last higher high. Our stop loss is 1 ATR and our take profit the next key resistance. For take profit, we analyze the historical price action and we identify the closest strong historically significant level. And look how perfectly this trade played out. Now let's discuss how to trade a bearish break-off structure. In a bearish trend, a bearish violation of the level of the last lower low and the candle close below that is a very important event that signifies the strength of the sellers and the highly probable bearish continuation. Your perfect entry point after the confirmed bearish break-off structure is the retest of a broken level of the last lower low. Your take profit should be based on the next key support and your stop loss is 1 ATR. Look at the price action on Euro-New Zealand pair on a daily time frame. Obviously, the market is bearish. The market is trading in a bearish trend and we see a confirmed bearish break-off structure. We see a daily candle close below the level of the last lower low. To swing short the market properly, we set the sell limit order on a retest of a broken level of the last lower low. Our take profit is the closest key historical support and the stop loss is 1 ATR. And by the way, for ATR, I do not change the settings. I take the default 14 range settings. More than 160 pips were made with this trade. Strategy number 2, trend line swing strategy. That strategy will be based on a rising trend line in a bullish trend and the trend line should strictly based on the higher lows. In a bearish trend, the strategy will be based on a falling trend line and the falling trend line should be based on the lower highs. And first, let's discuss how to trade a rising trend line in a bullish trend. In a bullish trend, higher lows may respect a rising trend line. Such a trend line will be a strong vertical support. It will provide a very safe point to buy the market from. Your perfect entry point will be the test of the rising trend line. Your take profit should be based on the current higher high and stop loss will be based on 1 ATR. And when you trade a rising trend line in a bullish trend, remember a very important rule. You should strictly analyze how many times the market respected that trend line in the past. Make sure that the market respected the trend line at least 3 times. You can see that here in dollar CAD pair we have a bullish trend and the market respected that rising trend line 3 times. That trend line we can trade. While here on a pound dollar pair, even though the market is bullish, we have a trend line that is based just on 2 touches, 2 bullish reactions. Such a trend line we won't trade. Take a look at the price action on the euro yen pair on a daily time frame. The market is bullish, the market is trading in a bullish trend, and the price perfectly respects a rising trend line that is based on higher lows. Obviously, for us, such a trend line can provide a perfect entry to buy the market. Buying the market after the test of that rising trend line, we set our stop loss based on 1 ATR, and our take profit for the trade is the last higher high. Almost 300 pips were made with my students with that trade. And now let's discuss how to swing trade a falling trend line in a bearish trend. In a bearish trend, a falling trend line that is based on lower highs will be a strong vertical resistance and it will provide a very safe point to sell the market from. Your perfect entry point will be the test of that falling trend line, stop loss will be based on 1 ATR, and your take profit will be the current lower low. And again, remember a very important rule. In a bearish trend, a falling trend line that is based on lower highs should be strictly based on at least 3 touches and 3 consequent bearish reactions. For that reason, this falling trend line on euro pound pair won't be valid and we will not trade it. Look at this major falling trend line on a euro Swiss pair on a daily. The market is trading in a strong bearish trend and lower highs perfectly respect that falling trend line that was respected by the market many times in the past. Obviously, for us, that trend line will provide a perfect point to sell the market from. And here's how the swing short from that trend line should look. We set our stop loss based on 1 ATR. Our entry is the test of the trend line, and our take profit is based on the level of the current lower low. More than 250 pips of profit were made with that short trade. Strategy number 3, higher low and lower high swing strategy. This swing trading strategy will be based on the last higher low in a bullish trend and on the last lower high in a bearish trend. First, let's discuss how to swing trade a bullish market based on the higher lows. In a bullish trend, the level of the last higher low composes a very important horizontal support from where with a high probability the next bullish wave will initiate. That support level will provide a safe point to buy the market from. Again, stop loss is based on 1 ATR and our take profit is the level of the last higher high. Take a look at the example. We have a strong bullish trend on a dollar Swiss pair on a daily time frame. And here the level of the last higher low is a very significant support for us. Simply set a buy limit order on that support on the level of the last higher low, set your stop loss based on 1 ATR, and your take profit is the last higher high. Look how perfectly the market respected that level and how nicely the price bounced. Now let's discuss how to swing trade a bearish market based on lower highs. In a bearish trend, the level of the last lower high composes a significant resistance from where we can short the market, anticipating a bearish trend continuation. This level will give us the perfect point to short the market from with a stop loss based on 1 ATR and take profit based on the level of the last lower low. Take a look at the example on euro dollar pair. The market is trading in a bearish trend on a daily time frame, and here I underline the level of the last lower high. We set a sell limit order on a retest of that level with our students. Stop loss is 1 ATR and take profit is the last lower low. And the target was quickly reached and the bearish trend continued. All the strategies are very accurate. It provides good reward to risk ratio. They are simple to understand and they are simple to apply. But remember that for all these 3 strategies, you should carefully measure lot size for your trades because the stop losses on a daily time frame are quite big in pips. Try them all and find the one that suits your trading style. If you want to learn my swing trading strategy, do not forget to check my premium group. It is 40% discount now. Don't miss your chance and check the link in the description below. Also, traders, do not forget to watch my other videos.